Okay, so starting off with the first question, what time frame do I trade in real life? I trade, well, it depends on the context of the trade. So time frames are like a microscope, um, and the markets are fractal, meaning that these patterns repeat over and over on different time frames. So I could find this exact pattern on the 1 minute time frame. So the lower time frames respect the higher time frame trends. So here's gasoline. This is terrifying because looking at this RSI, the RSI down here, I hate when it does this. There. When it did this here, it put in this hidden divergence with this low going all the way back to here. Um, this is basically projecting a target of, let's see, 180. This is, we'll just call it a dollar. Add that to the high. It's like $5 a gallon, possibly more. If this whole thing is a flag base, 426, 226, that's like 650 a gallon. Um, and so I kind of like you. I use this to establish the amount of fuel breakout could have. So now that I see that on the higher time frame, there's a hidden divergence with here, roughly here, with this low RSI reading, with going all the way back here. Now we'll zoom in to say the 4 hour and take a look at what's going on with this breakout, because that says it has enough fuel to hit like, like $5 to $6 at least. And once that fuel is established, then you take a look at what's going on with this whole breakout. And now I'm looking for hidden divergences going back to the initial breakout. So I want to look at like where is the lowest point of, say, where price is ranging, and compare that with an RSI reading back here. It's not perfect. Like it's subjective to a certain extent. Like I could measure this all the way back to here, really, because this went so deep. Um, so I use time frames to establish what's going on. I look, first of all, the first thing to look at is the higher time frame, because you want to see what's going on from a bird's eye view, and then you start narrowing in. And so I'm looking for evidence of what's going on here to figure out where could this be going. So the low where this RSI was reading 290, I'm just going to measure it with this. We'll say roughly 190, so it's a dollar to the high, 437. And I'm going to use the date range. Like I said, this is not perfect. I'll take the average of this entire cluster because this is actually going all the way back to here. So I'll just take it from here. And that was a dollar, because I'm measuring from here down through this cluster here. So that's roughly 182, 287. I'm just going to make it an even dollar because it doesn't have to be perfect. I'm going to make it a little more, actually. We'll just say 450. Um, and we're going to stretch this out. So 332 times 2, 664. So this is basically projecting gas futures. This isn't, the actual price of gas is like roughly 80 cents higher than this. So if it's gonna hit this, it's gonna be like 540 a gallon, which is just like makes me sick even just like making these measurements of that. But that's what this is saying. This is what like this is price like speaking its language, saying like when it does this, it's saying, "Hey, I'm about to go do this," and I can either call bullshit or, you know, take its word for it, basically. And it doesn't have to just go like perfectly higher. It can go down. It can chop and then do it at the last second. It could do it tomorrow. It could like I don't know the path it's going to take. This is simply telling me it has the fuel to hit that target, and it will whatever path it takes, I don't know. But this is what it's saying it can do. That just took 6 minutes. Good lord. I just covered the time frame thing, the divergence, what percent of the account is a starter position. Um, I mean, each position shouldn't be more than like 1 to 2%, 1 to 3%. Like if you have some really strong conviction, maybe 3 to 5. But with this stuff, like usually when you're like it'll things will go wrong at the worst possible time when you put the most money on, which is why understanding risk reward and how to keep that manage that correctly and not go you know putting in half of the account on some play you're like, oh, this looks really good, I got to do this, and then it just doesn't work for some dumbass reason. So I'd say 1 to 3% per play, and if it's options, you can't leave a stop loss because it's so volatile. It'll just whip the algorithms will just whip you. It'll stop you out. So you have to factor that in. Um, Full size, like I said, I don't know, 3 to 5%, 3-4%, something like that, depending on the account size. I mean, it depends on your bankroll. Like if you're a multimillionaire, you don't give a shit, right? But if you're like playing with rent money, like it's not going to be as easy to take on risk accordingly, to do this correctly. Oh, and price at your target, do you sell it all or scale out partial? So let's just say this was to pan out. That would suck, but I mean, this is what it's saying. This is projecting a point of resistance. It's not like most likely if it was to tap this, typically what it will do, it'll either correct or it will just chop and build another one of these and then put in another hidden divergence somewhere up here. Like say it pulls back, the RSI down here could come in, and if it springs this low and makes another low, then it's just gonna rip higher. So typically, like I'll project out a target, and when it hits that target, yeah, I'll start scaling out, or at the very least, I'll place a stop loss. Um, you know, Fairly close to where the target is. I'll start placing stop losses under some demand zones, expecting to get stopped out because I want my orders to get filled. If that was to happen, when you use options instead of just buying stocks, well, you want something. First of all, you want something that's volatile, that's moving aggressively, like gasoline is doing now. This would be, an excellent candidate for an options trade because um, you have a clear hidden divergence on the 4-hour chart. You have established fuel for a move higher on the weekly chart. Like here was the hidden divergence here with these. Um, you want something that's moving quickly. You do not want to get into something that's just chopping sideways, going nowhere, and you want to always have enough time for it to reach the destination. And I can even like scale into like this little move that's happening here. Let's go into the 15-minute. Like I said, all these patterns are fractal. They happen on all different time frames. And so as it's moving up, you can see, well, I'll just scale up to the 30-minute. You can see every time when this is in a strong uptrend, the RSI down here, once this is tagging like deep levels, like below 40, it's just acting as fuel and moving higher. And just what it did recently with this here, see this went really deep down in here and just springed all of that. So now this is probably just going to keep ripping higher. And gas is going to go up like every fucking day. This whole thing is a range. This is typically a really good time to buy options is when it breaks above these highs. When you have this accumulation range, when it's like, it looks volatile, but really it's not from a higher time frame point of view, because every time it's tapping prior lows or sweeping lows, you're getting strong reactions higher. And this is basically like, I'm gonna have to make another video to cover options, but like, here's a big can of 210 million inputs. That's interesting. But every time people are trying to short it, it's just ripping higher. Like, this whole base is so like low volatility. Anyways, so there's an API integration thing in here, data access API. And basically, you can go in here and they have AI alerts. And if you come up with a specific formula, like on my customer alerts, I've been using these for a while. Like, I basically put in, here's an alert for when a certain ticker goes above the 30-day volume um, ratio by 3.5. I've put call ratio alerts when anything above 12 million or 20 million market cap goes above 12 volume ratio, and then it spits out all of these names, and this takes so freaking long to cover all of these. But in here, there's like gems. You just have to scan all of these things to find it. You don't know which one is gonna be correct or show anything with like actual structure. But typically you'll see, sometimes you'll see stuff like this, like there's a huge candle premium. So someone up here was interested, price will pull back. I have to cover this in another video. This is going to take too fucking long. But there is an API thing, and you can create your own custom alerts. And I think this links with like Tasty Trade or something. And they have bots that you can trade off of. See, they got a bot thing here. And then in custom alerts, you can do a really simple AI alert builder and then integrate that into Claude or whatever AI platform that you're using to try and, create some sort of magic AI trader program, which, you know, is difficult to say the least. So I'll have to cover the options thing in another video in more depth. Um, and just one quick chart game thing, like, these are pretty decent. I mean, when you have this like large base and the pullbacks are really low volatility, I'm basically just measuring the high and the low. I think it was 25, 16, so 34. So this should have fuel to go higher. So I'm just gonna go ape shit here, just buy. And then this is what can happen sometimes. Like, I don't know how or when this is gonna work. It just has enough fuel to go higher, but a lot of times it's just going to try and do this sort of chop thing for a million years before it actually breaks out. The video is gonna stop soon. Are you gonna fucking break out or not? Goddamn. It's gonna break out. The game is just gonna, it's not gonna let me see it happen. It's just so annoying. So I'll have to figure to do the rest on another video.